and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the show. So please keep commenting on our feed and we'll have your questions addressed by our technical analyst later on in the show. But before introducing our guests for the day, let's see what the global setup looks like. Wall Street snapped a two-day losing streak ahead of the US Fed's two-day policy meeting that kicks off today. Asian markets follow the US peers higher even as Japan's inflation accelerates to an 8-year high in August. SGX Nifty signals gap up open for the Indian markets up over 150 points. Most European indices closed provisionally higher Monday, recovering from tough week which saw stocks fall across the board. Stoxx600 and CAC and mildly lower. DAX and FTSE closed with decent gains. Shares of Adani Enterprises, ACC and Ambuja Cements rose yesterday with Ambuja hitting a record high of 10% higher in trade. We discuss how Adani's entry into the cement sector could reshape industry dynamics. And stocks in the spotlight today are Natco Pharma, Butterfly, Gandhimathi, Advanced Enzymes and V-Mart. Okay, let's get going and discuss some of the stocks that are likely to be in the spotlight on back of news flow. We have our technical expert on the show today, Ruchit Jain from 5 Paisa. Morning, Ruchit. Talk to us about the trade setup for the day. Gap up open despite, how the Japan's numbers for inflation have panned out. What's in store for investors and traders today?
Yeah, hi, very good morning, Karunya. Well, Karunya, if you look at the recent past, then in last few weeks, we have seen that 18,000, 18,100 range has become a very stiff resistance for the markets to cross. And I think the markets needs a trigger to cross that level. And until we see a decisive breakout about that 18,000, 18,100, we are not out of the woods yet. So I think today, although we might see a gap up opening because the momentum readings were quite oversold yesterday morning. Once we saw a sharp correction from that 18,060 to 17,450 till yesterday morning. So we would take this as a pullback move, which is retracing the recent correction, and more or less the directional move would be seen only once we see this FMC policy outcome. So I think on the higher side, the upside should be limited. The call writers have built a good position around that 18,000 mark, which I think would be difficult for the markets to cross immediately. So focus should be more on the defensive names or stock-specific ideas where we could see some good momentum rather than the index. So if you already open a gap up around that 17,750, 17,800, I think markets will likely to show some resistance over there, and we may see some consolidation post a gap up opening throughout the day. So upside seems to be limited if we see a gap up as the SGX Nifty is showing, and 17,750 to 17,800 would be the range where I think market would try to resist again.
Okay, all right. What about some of these individual stocks? I want to flag off one by one. The first one is Advanced Enzymes. There has been some fund action there. Promoter has sold 26 lakh, close to 26 lakh shares for a price of 270.04 per share. The buyer in this transaction is Nalanda India, which has added 29.1 lakh shares of the company. So Nalanda lapping up Advanced Enzymes. Could the stock react positively to that?
So as of now, the broader trend for the stock is still negative. If you look at last few months where the mid-cap index has shown a decent up move, but the stock has not seen any participation on the upside, and even in the volumes are not that high when the prices are in between showing up moves. So I think the broader trend for the stock continues to remain on the negative side. On the lower side, 260 is the immediate support for the stock, and once that 260 level is broken, I think the stock could see further sharp correction. So I think one should not be in a hurry to do any kind of bottom fishing unless we see either a high top, high bottom structure or price up move supported by good volumes.
Okay. How about V-Mart Retail? How's that looking on the technicals? We're picking up that Amansa Holdings has bought 2.9 lakh shares of the company, close to 2,915 rupees a piece. So that's the update. And as far as the seller in this transaction is concerned, it's Plutus Wealth, which is hived off to 3.03 lakh shares. Again, close to 2,915 was the selling price on an average basis. Talk to us about V-Mart and how it's looking on the chart.
So after a sharp price-wise correction, of late, last 1.5 months, the stock has, I think, again witnessed a good buying interest where up move has been supported by good volumes. High top, high bottom structure on the charts have also been shaped up. So this is looking a bit positive. And on the high side, the stock could attempt to test the 3250, 3300, which is the next resistance of the previous swing has coming in. So I think yes, relatively, I think this chart structure looks better now compared to what it was looking 2.5 months earlier. And we could see some momentum continuing towards that over about 3200 mark in next few trading sessions. So one can look to buy the stock with the stop loss below 27,770 for potential targets around 3200 to 3250.
Okay, all right. Moving on to the third stock for the day, you have Butterfly Gandhimathi, a stock that's not discussed very often, but has a lot of interest actually from the trader standpoint. Crompton Greaves Consumer Electricals is looking to sell 6% stake in the company via OFS. The floor price has been set at 1370 rupees a piece. The stock right now is trading close to 1500 bucks. Talk to us about what's likely to happen for them next. Which way is it headed?
So usually we do not see very high volumes on a daily basis in this stock, but I think the broader trend for the stock looks quite positive. And in case, due to this, if we get any kind of declines, then I think mid to long term investors who are looking for a delivery based buy can look to buy the stock on dips. So the downside seems to be limited from here on. I think 1400, 1450 would be the range where the stock would find a good support in if we get any kind of declines in the near future. And if we take a view of about 6 to 8 months or 12 months point of view, then I think the stock has potential to go up to 2000 or and beyond. So stock looks positive, but not from a very short-term trading perspective, but more it seems to be a stock which one should look to keep it in the portfolio. And in case if we get any dips, then delivery-based buying can be done in this.
Okay. The next and the last stock I want to flag off is Natco Pharma. They've got CTPR launch approval from the Delhi High Court. CTPR is essentially chlorantinoprole and its formulations, and they have backed the order from Delhi High Court to launch the same. And they're allowed to launch not only CTPR but also its formulations through a non-infringing process. So some developments in terms of approvals here for Natco Pharma. The stock's still away from its August highs of 751, 752 rupees, right now at 637 levels. Do you think it could react positively to this news flow, or even, in the next few days, do you see any momentum building up?
Frankly, not really, because the stock has, in the August, we have seen very sharp correction in the stock in July, August, where the stock corrected from 770 to about 600 levels in very few trading sessions. And during that sell-off, the volumes were quite high. Usually we see that whenever the selling gets accompanied by high volumes, those stocks tend to underperform in short to medium term. So if based on the news, if we get any kind of pullback moves also, then those traders or investors who are stuck at higher levels in this recent correction, I think you would find some good amount of supply from their side, which would restrict the up move in the stock. So I think within the pharma names, I think there are better large cap names available, where the risk is low and there is a good reward potential on the upside. But Natco Pharma, the stock may remain a bit volatile in the near term, but chart structure does not look to be much promising from a sustainable perspective.
Okay. Richard, request you to stay on with us. I want to shift gears and put the spotlight on the cement sector. Let's bring on board Ronald Sioni of Sharekhan to talk more about this particular segment of the market. Ronald, thank you so much for taking time out and joining us this morning. I want to understand what's happening in the cement pack. Of course, the big news flow was the fact that Adani Group has completed the acquisition of stake in ACC and Ambuja Cements. Yesterday, all three stocks were soaring away in trade. Ambuja, in fact, hit a record high, rising 10% in trade. But let's look at the sector dynamics. What changes now with Adani's entry, and how are other larger players likely to be positioned now? Will the competitive intensity increase, the fight for market share increase going forward? Ronald, you're on mute. Request you to unmute and start speaking.
Yeah, sorry. Good morning, Karunya. So the much awaited acquisition had been completed by Adani Group, and the infusion of 20,000 crore through warrants in the Ambuja cement has driven capacity expansion plans going ahead. So if we see, like, Ambuja has around 85 billion rupees of cash, and 200 billion is through this warrants, and rupees 50 billion per annum is the cash flow generation expectations per annum from Ambuja. So overall, Adani's target of doubling the capacity from 68 to 130 to 140 million ton over the next 5 years gets very well played out. But the point is that how these capacity additions would be done, whether there would be a mix of organic and inorganic, there would be entirely inorganic expansions or organic expansions. So in case, the Adani Group takes through an acquisition route and much more capacities are added through the acquisition route, then the industry level capacity does not increase much. And the new capacities or the greenfield capacities will not come up. There will only be consolidation in the cement sector. And hence, I think this has been taken positively rather than, taking it negatively by the cement industry as a whole. More so, we see that smaller players like, India Cements, JK Lakshmi Cement, Panglam Cement, Sagar Cement, Orient Cement, these stocks, have started to run up, being a possible acquisition targets for the larger peers going ahead, because both the larger players like Ultratech has hinted towards around 200 million ton capacity by 2030 from currently 116 million ton. Adani Group had also highlighted being the largest to become the largest cement company by 2030. So they have 8 to 10 years plan of to expand these capacities aggressively.
Right.
And other thing is also that if you expand the capacity organically, it would take 4-5 years to commission these capacities. So some mix of inorganic expansions are to be sure, and this would help in expediting this capacity additions in their respective companies.
But Ronald, like you said, many of these cement companies, whether they're larger players or relatively smaller, the stocks have been rallying quite a bit. So from an investor standpoint, what should we expect going forward? How's the pricing trend, demand scenario? How are things looking? Because those who missed the rally this time around, should they still buy at these levels? Are valuations okay? Or should they wait because there could be some more or perhaps better opportunities to enter?
For ACC and Ambuja, we do not have an active coverage, but since the Adani's news, the stock has run up quite and they have caught up on valuation front. While other stocks has like larger players like Ultratech and Ramco have been trading at 13 to 14 EV to EBITDA of FY24, and smaller companies have also increased in their valuation multiple. But on the sector front, we see that consolidation would generally help in maintaining the pricing discipline. There should not be any ad hoc capacity expansions or a steep decline in prices, because this consolidation would help in pricing discipline, and this should lead to overall general improvement in operational profitability. So at Sharekhan, our preferred picks for the cement sector are Ultratech, Dalmia Bharat, JK Lakshmi Cement, the Ramco Cement, and Sri Cement.
Okay, Ronald, thank you so much for chatting with us and for sharing your thoughts on what's happening in the cement space, and of course your favorite picks as well from the cement pack. Okay, moving back to technicals, let's bring on board some of our viewer queries and lots of comments coming in. First up is a question I want you to address, Ruchit. This is from Sanjay Chaudhary. He wants to know if Wipro is a good bet for the long haul. How are the technicals looking? Because IT still continues to be very much under pressure, but over the longer term, could things turn around?
I think yes, IT has been one space which has shown a good underperformance in the broader markets. If you look at the other indices, Nifty 18,600 was all-time high. We are quite close to that 18,000 mark. Bank Nifty has touched that all-time high, but IT index is quite away, quite far from that previous highs which it had made. Now, if you look at if you compare it with the global markets, then I think the sell-off in the IT stocks here has to more do with the global sell-off which we are witnessing. Because even if we look in the US markets, then the Nasdaq has seen a decent underperformance as more selling has been seen in IT stocks, especially the new age tech companies. So I think unless we see global markets bottoming out or a good positive things coming in the global markets, the IT space is likely to continue its underperformance going ahead. So one should not be in a hurry to do bottom fishing or lap up shares over here. But yes, a gradual buying, if is looking from a very long-term perspective, then some gradual buying within the IT space could be started, where at least just 20 to 25% quantity, whatever he wants to buy, can be bought at current levels. But now that's about the sector which I spoke about. Now, coming on to the stock-specific ideas, I think rather than Wipro, we should look either at Infosys or TCS from the large cap space where the relative outperformance was there when the prices were going up. And now, even if you see when the market is correcting, then Wipro is correcting more than the other two peers. So this clearly shows a relative underperformance in Wipro compared to the other names. So from a long-term perspective, I think should be within the IT space for investment. Infosys and TCS should be preferred to buy in a gradual manner rather than Wipro.
Okay. Next query is from Trilok, and he wants your advice on SBI, which is trading very close to its 52-week high levels. So do you see the stock breach those levels and make a fresh high perhaps anytime soon?
So as of now, the trend yes continues to remain positive. The high top, high bottom structure is in place. Price up moves have been supported by good volumes, and still there are no signs of reversals in the banking index as well as the PSU banking names. So yes, it could continue to its move higher. 550 would be the immediate support that I would watch out for. And until the stock breaks that 550 mark, the broader trend continues to remain positive, and we can expect further up moves in the short term.
Okay. Sartaj Mohammed is writing to us, and he wants your view on Apollo Hospitals. Good momentum seen there actually last one and a half month. From, I think, August close of 4,025 levels, the stock has successfully breached the 4,300 mark on the upside. What next for Apollo?
So we have seen both sides volatility in the stock from 4560, 4600. Initially, we saw correction towards that 4000, from 4000 to again the stock move higher towards that 4500. So now it seems that this broader range, the stock has formed. And if I look at a bit longer term chart, then a broad triangle pattern has been forming. And triangles usually indicate more of a consolidation phase. So does not seem much negative from here. But the upside also seems would be limited in the near term, and more of a consolidation phase or a time-wise correction could be expected in the broad range of 4,000 to 4,500. So in case if the stock comes to the lower end of the range in any time in the near future, then I think at lower levels near the supports, one can look to buy the shares. But buy and dip approach should be kept. From medium-term perspective, I think the stocks may see some more time-wise correction before showing any directional move.
Okay. There's one more query coming in. This is for a small-cap IT name, Birlasoft. What is your view here? Jespin is writing to us, and he wants to understand what lies ahead for this one. Again, like most of the IT peers, this one has been rather sluggish.
Yes, clearly we are seeing the trend for the stock still negative. In between pullbacks, moves were there from some of the mid-cap IT names, but Birlasoft did not show much participation, and it was not able to surpass its hurdle of 330. So I think as of now, the trend seems to be negative. And again, within the mid-cap IT space, if we come to the stock-specific approach, since we have already spoken about the index perspective, then I think KPIT Tech should be more preferred over Birlasoft. So even if you have holdings in your portfolio, Birlasoft, then I think it would be a good idea to shift from Birlasoft to KPIT Tech so that you would remain in the same sector, but a better name which is outperforming during corrective phases.
Okay. How's SAIL looking on the chart? Abhijit is writing to us, and he wants your view here. Last 1 week, definitely quite rough for this one. What lies ahead?
Z Entertainment you spoke about?
SAIL.
SAIL, okay. So metals, I think it needs more confirmation on the upside because the dollar index has not shown any kind of reversal which is rising. And usually we know that the metal space has the inverse correlationship with the dollar index. And until we see any major corrections in the dollar index, I think the metals would not be in a hurry to show any bigger up move from current levels, because already price rise from the oversold zone, they have seen a pullback move in last 1.5 months. So on the high side, 82 to 84 is a stiff resistance for the stock until we see a breakout above that level. I do not expect any major move on the upside in the near term. At the best, it can do some time-wise correction in that range of 84 to 77, 76 on the lower side. but upside seems to be limited until we see any reversals in the dollar index. I think overall metals should be avoided.
Okay. What is your view on GAIL as well? If you can shed some light there. Prashant Chaudhary is writing to us and he wants your advice on GAIL. Very slow mover last 1 month, just added about 5-6 rupees on the upside. Do you think it could build on to any meaningful gains from here on?
Not really. Even if I look at some mid to long term chart, then after an impulsive up move from the COVID lows, the stock seems to be retracing that entire up move which was seen from the COVID lows to the recent swing highs. And the retracement has still seems to not have been completed. On the lower side, 85, 86, I think is the major support for the stock which is formed. But from there, the pullback move which we witnessed towards 94 has not been supported by very increasing volumes or high volumes. And in absence of good volumes along with the price up move, usually the upside could be limited. So do not expect any major move as of now. I think the corrective phase could continue for a while. And in case if the stock comes at the lower end of the support around that 85 mark, then one should take a review on the stock.
Okay. The next question is coming in from Aarti and she wants to know if she can buy Tata Power for the short term. Good momentum seen here and it has sustained very firmly above the 200 levels ever since it bounced back from the June lows. Do you think in the short term it could yield some more gains from these levels?
Recently, during last week itself, the stock even gave a breakout above that hurdle of 240, which was acting as a major resistance. But in spite of that breakout, we have not seen any follow-up buying coming there. And in fact, the stock is again corrected below that previous resistance. So if the trend has been strong, then that resistance should have acted as a support, which has not been done. So if it's slow, if she's looking only from a short-term perspective, I think just for a day or two trading, if she wants to do, then can expect a pullback moves again towards 238, 240 mark. But not a big upside should be expected in the near term.
Okay. How's Ease My Trip looking on the chart? Naveen wants your view here. Last 2.5 months, it's been very, very range bound, right?
Which stock? I didn't get you.
Ease My Trip.
Okay, yeah. So I think this has been one interesting stock where we have seen a good time-wise correction when the broader mid-cap space was correcting. So rather than price-wise correction, the stock has shown a good time-wise correction, but it needs a breakout above that 440 mark for a resumption of its uptrend. So if any existing holdings are there, then can be held on with the stop loss below 360, take a positional view. But is looking to add fresh buying over there, then I think breakout above 440 should then lead to some good momentum. So more of a time-wise correction is going on the stock. 440 would be the breakout level, which should be on radar.
All right. Okay. Well, we've discussed a lot of mid and small caps on the show today, Ruchit, but I know you have two heavyweights to flag off for our viewers as far as your picks are concerned. So tell us what they are.
Yeah, so two heavyweights that I will be recommending today, and both, if you see, both are from the defensive packs. So I think in near term, since we have a FOMC meet ahead of us, and considering that the markets would turn more volatile, and that 100 mark has been acting as a good resistance, so we are not out of the woods yet. So I think in case of volatility, defensives would be one space where I think we should see some good buying interest, or relatively relatively I think the risk would be less. So both from a defensive space, one is the heavyweight Sun Pharma. So of course the pharma and FMCG are the two packs where usually we see defensive buying whenever market shows some volatility. So Sun Pharma has seen some good consolidation over last few days. Prices are trading around the support level. Yesterday we witnessed a good buying interest from the support around of 850, which it has formed. The 200 EMA as well as 61.8% retracement of the previous up move. So there are many things which are indicating a strong support base around that 850 mark. So keep a stop loss below 850 and go long on Sun Pharma, expecting targets around 918. And another defensive, of course, from the FMCG space would be HUL. Where again similar chart structure, the stock prices have seen a good buying interest around its major support level yesterday and in last two trading sessions. So I think HUL would be one stock where we could see some pullback move again. So buy HUL with stop loss below 2520 for potential short-term targets around 2680.
All right. Thank you so much, Ruchit, for joining in and for sharing your views on a host of stocks, market, as well as your picks. With that, we're wrapping it up right here on Morning Trade. Thank you so much for watching.